Now we are talking about what are the source documents. A company needs some information to compute their financial statement, starting from the single ledger, from the bookkeeping, from the sales ledger to purchasing ledger to general ledger to so on and so forth, journal and so on and so forth. They need invoices. You don't just invent records. No. All those things, what forms those documents? Those students, those who are used to work in your class, or so to say, your lecturer won't produce invoices for you. They only tell you assuming, they ascribe some figures. But what are the source documents in the real-time companies? One, you have what we call the invoice. Okay? Now, the invoice is just a document which shows the value of goods sold by a seller to a buyer. Okay? If you are a sales rep in your company, you go and buy. They will issue you invoice containing the goods you bought. So you have to tender those invoices to your company. So of course your company will now give to your accountant while computing. Okay, for purchases ledger. That is how it works. Then the next one? We have what we call debit and credit notes. Okay, so both debit and credit notes are used to make adjustments. You understand? Adjustment. Maybe somebody buy something on credit, which means they are your debtor. Then you bought something on credit, they are your creditors. So as this fee, you are a debtor of those people. You were able to negotiate or kind of do adjustment during preparing those things. So either on the invoice or main transfer from the account to the other, they are now used where one, what are the things? What did they use it for? They use it when goods or empty crates or cartons or any empty things returned by the buyer. Of course, you understand that when that occurs because either return inward or return outward. Then the number two, the buyer is undercharged. Okay, they need to do adjustment on that. Okay, if the buyer is undercharged and the manager discover you have to do adjustment, go to the field and collect the balance. Then they will have to do adjustment because you enter the wrong figures. Okay, or then another is that the buyer is overcharged. You have to return some. Okay, and the manager says, no, this is our good customers. We have overcharged this man, and compare with what other people are there, and we need to retain this customer. They have to do that. We need a debit and credit note to do all these adjustments. Okay, now we have discount is allowed or discount disallowed. Okay, you know what that means. Now the document also this paper, the debit and credit note also do adjustment on an amount. If an amount is transferred from one account to the other, that's another one. That's the fifth one. The sixth one is that the buyer is charged interest for overdue balances. Okay. Now another one is that 7, cost of carriage is charged at the account of the buyer. You get my point now. The buyer bought something instead of the cost of carriage supposed to be at the seller's expense, not the buyer. Okay. Now these are the notes the company needs. This is one of the source documents that will help in computing. Okay. So both buyers and seller can now use either debit or credit notes depending on the circumstances at the moment. Okay. Now the third one is that you need the receipt. What is the receipt now? This is the evidence of cash or check received. Okay. These are the receipts. Now it is used to write up the cash book. Simple. That's what it's all about. Okay. Now another one, the fourth one is a check stop. Sometimes when check is issued, you usually check to a customer or maybe somebody work for you and you don't have cash and you have in your current account. When you write check, you write in both stop where you tear. That small one that still remain at the left hand side, small. You write on both sides. Those are what you call check stop. Check stop. You keep them. Okay. Let's assume you written for maybe 10 months or so, written for 10 customers, and you have 10 check stop written, and they've catch them out. the only thing to do all those the document at that moment, they will have to bring the check to the table and put at the check stop. Then they will write all those things, those transactions you've carried out. You must have issued that. Why the bank is holding the bigger one, you are holding the stop with you for accounting purposes. Thank you very much. You're welcome.